Hey guys! Welcome back to my channel. Today we're going to be talking about a really important issue that's been in the news recently: US banks sitting on unrealized losses of $620 billion. Now, if you're not familiar with the term unrealized losses, let me break it down for you. Basically, it means that the value of certain assets held by these banks has dropped significantly, but they haven't actually sold those assets yet. So they haven't realized the loss on paper, but it's still there. And $620 billion is a huge amount of money. It's more than $500 billion. That's a lot of money that could be used for other things like investing in new projects or providing loans to small businesses. So, why are these losses happening? Well, there are a few reasons. One is the ongoing COVID-19 pandemic, which has had a big impact on the economy. Many businesses have had to close down or reduce operations, which has hurt their revenue and profitability. This has in turn affected the value of their assets, which banks may hold as collateral for loans. Another factor is the low interest rate environment we've been in for several years now. When interest rates are low, it can be harder for banks to make money from lending. They may take on more risk in order to generate higher returns, which can lead to losses if those risks don't pay off. So, what does this mean for the banking industry and for us as consumers? Well, in the short term, it might not mean much. Most of these losses are on paper and banks have plenty of capital to absorb them. But in the long term, it could have an impact on the availability of credit and the health of the overall economy. Banks that are dealing with significant losses may be less willing to lend money, which could make it harder for businesses and individuals to access credit. And if the economy as a whole is struggling, that could lead to job losses and other negative consequences. So, what can be done about this? Well, there's no easy answer. Banks may need to adjust their risk management strategies to avoid these kinds of losses in the future. Regulators may need to take a closer look at the banking industry and ensure that it's operating in a safe and sound manner. And as consumers, we can be mindful of our own financial situations and make sure we're not taking on too much risk. That's all for today's video. I hope you found it informative and thought-provoking. As always, please let me know your thoughts in the comments below. And if you haven't already, be sure to subscribe to my channel for more videos like this one. Thanks for watching.